Hi everyone, it's Jason Burack of Wall Street for Main Street. Just wanted to do a short video today, talk about how the stock market and the gold market is responding to Trump winning the election. Also about Stanley Druckenmiller, billionaire Stanley Druckenmiller, who in December of 2015, early January of 2016, he disclosed publicly that he was very bullish gold. And a lot of people piggyback that trade. And recently he's disclosed that since Trump won the election, he expects more inflation. And he's saying for some reason that more inflation is bad for gold. So I want to explain how I think long-term Trump's economic policies, monetary and fiscal policies, will be good long-term for gold and silver, although that's not what's happening in how the market is reacting right now. But for those of you who weren't alive, and I wasn't alive initially when Ronald Reagan took office, but Ronald Reagan implemented policies called supply-side economics, or Reaganomics. And Paul Craig Roberts and others, I believe Laffer, of the Laffer curve, were involved in this. And basically supply-side economics, unlike Keynesian economics, although it is a certain type of stimulus, Keynesians hate it anyway, but it's basically tax cuts, borrowing and spending with tax cuts, and hoping that you can generate real economic growth. So right now, the U.S.'s debt problems are very large. In the past, when Ronald Reagan and the people under him in his economic advisors, like Paul Craig Roberts and others, implemented supply-side economics, the U.S. was still a creditor nation. Its economy was nowhere near as debt-dependent. And so supply-side economics worked, at least for a while. Reagan initially raised taxes, and then he started to cut them. Interest rates were much higher back then. And so, there was enormous tax cuts at some point in the Reagan administration, and the real economy started to take off to that. It appears that Donald Trump is planning to, not only with massive infrastructure spending, but he's planning massive tax cuts on many small businesses and middle class. You can go look up the exact amounts of tax cuts. There's going to be certain things for large corporations and Wall Street, like carried interest, that they're not going to be able to carry forward. But these tax plans, I would say, are a lot more fair for small business and mainstream America. I think the dividend tax on Donald Trump's tax plans are going to go up a little bit. The thing is, though, a lot of these trade deals and tax plans, Congress is going to have to approve them, and we don't know how long it's going to take Trump to push them through Congress. So yes, the Republicans control the House and the Senate, but they're not super majorities. So, the Republicans do not control 2/3 of both the House of Representatives and Congress. And in 2 years, the House could swing back to Democrat, which would bog things up even more. It would make it even tougher for Trump to put policies forward. Although I would say, and I've talked about this in many other interviews and videos, that I think the Republicans and Democrats, even Hillary Clinton and Larry Summers, wanted infrastructure spending plans. So I think the market right now, one of the reasons why the stock market is high, copper had a little tiny rally, and gold and silver went down, is a lot of Wall Street market participants are thinking that, okay, maybe there is going to be inflation, but that they're betting that with this Reaganomics or supply-side economics, Donald Trump will get the real economy going a little bit again. Now, for a while now, the stock market hasn't had really much to do of anything with the real economy. It's been going up, good is bad and bad is good for a lot of the stock market rallies and slight corrections. So when the stock market was going up, there would be recent past, there would be bad economic data, and market participants would be betting on more Fed intervention, the Federal Reserve keeping interest rates low, more stimulus. I think Donald Trump, his plans with supply-side economics are going to be borrowing a lot more money, and ultimately all that increase in debt, we could have a rapid increase in the debt from $20 trillion, around $20 trillion, and that's the that's not obviously the real number with the unfunded liabilities for Social Security, Medicare, Medicaid, etc. But that's, the official stated U.S.'s national debt. We have pension funds that are also 4 to 7 times underfunded. We have real problems in this country. Donald Trump inherited a huge mess. But if supply-side economics does work, and there's not precedent for supply-side economics working, massive tax cuts and massive government borrowing and spending with this much debt already outstanding. There's not precedent for this already working. It's possible it could work. I mean, it's definitely possible that a lot of small business owners with Obamacare repealed or drastically reduced and nice tax cuts will decide that, instead of either only hiring a couple part-time employees or not hiring any part-time employees, we now have the confidence with these tax plans in place for Trump and Congress that we're going, and better trade deals renegotiated, that we are going to make investments in hiring more full-time employees. Because we've heard that from small business owners that they were apprehensive, many of them, to commit to investments and hire full-time employees because of all the potential penalties and lawsuits and extra taxes that Obama and many others in Congress, Democrats, had layered on in taxes over the years. So I think ultimately, even Stanley Fischer and others have admitted that Trump will start to ramp up the inflation, but he says that it won't be good for gold. This is an article on Seeking Alpha. I will put a link to this in the text box saying, if you want to read it, saying that billionaire Stanley Druckenmiller is wrong this time. Maybe he was forced. Maybe there was political pressure applied to him to sell his gold. Who knows anymore, guys? In these types of environments, we do know in the past that when Warren Buffett was accumulating mass amounts of physical silver on the LBMA, he was told to get out of that market, and that's where that physical silver was moved into the SLV. So we do know that when billionaires start to play in gold and silver and start to accumulate big positions, although Stanley Druckenmiller only had GLD shares, he wasn't accumulating massive amounts of physical gold or physical silver like the Hunt brothers. He wasn't buying massive amounts of mining stocks, to my knowledge. But ultimately, I think in the long term, this means if the real economy is not there's not real economic growth like Trump is hoping, we're going to be stuck with an even larger debt bill. The official debt on the U.S. debt clock could go from $20 trillion in the 4 years of the Trump administration, could go to 26, 27, maybe even more than that in trillions of dollars very, very quickly if Trump starts to borrow. Because when you do tax cuts and you borrow and spend more, that's less government revenues coming in, at least in theory. Now, in the past, when there was tax cuts across the board, there would be more economic growth in the real economy, and at the lower tax rates, there would be more total economic growth. But there's no guarantee that will work. In theory, it should, but we have competing theories here. So we have the regular Keynesian theory saying tax cuts like that don't work. Then we have supply-side economics saying it should. The Austrian school of economics would be to cut government spending and cut taxes, which Trump is not going to do. Trump wants to do a bunch of government spending on infrastructure, building walls, again, which takes congressional approval as well. So that could take well over a year to get those through the House of Representatives and Congress. So Trump is inheriting a huge mess. He didn't exactly... I'm not sure if he told the voter it's going to take a while for his policies to get implemented, but it's just the reality of the situation. So we'll see if Trump's supply-side economics or Reaganomics works, but long-term, I don't know what's going to happen in short term with gold and silver. Maybe it's going to go a little bit lower. This would be really good for the big five royalty and streaming companies like Franco-Nevada, Royal Gold, Sandstorm Gold, Silver Wheaton, and Osisko Gold Royalty. They've been looking for their next round of deals. Franco-Nevada, I think, just did a $100 million oil and natural gas royalty for immediate cash flow. So these guys, unlike the regular primary gold and silver miners, who, when the metals price drops a lot, their margins are enormously squeezed and may not generate much of any free cash flow, these large royalty and streaming companies, the big five as I call them, are still. Okay, so other long term, I think gold and silver. There's going to be more inflation with Trump's monetary and fiscal policies. The debt problem could grow even faster. Now, if there's real economic growth, this would somewhat offset some of the debt problems, and I think Trump is hoping that he can continue to borrow more and more debt at a locked-in, long-term fixed interest rate. So I don't know if that's going to be a good long-term solution, but in the short term, Trump may be able to help the real economy quite a bit. at least in theory. We'll have to see if he can do what he says. That's the thing about politicians, and Trump now is a politician, although, he wasn't a politician before, but now he is. The people in D.C., the swamp, they're going to be fighting him every step of the way, any inch of change he wants. The regular Republicans in Congress are going to be fighting him, the neocons, and and regular conservative Republicans, or cuck-servative, I think that's what Mike Cernovich is calling them. So, we have just tremendous amounts of economic problems and social problems that Trump is inheriting. We got George Soros funding these protests. He's basically committing treason. Paul Craig Roberts wrote an interesting article about that on the News Doctors that was released today. It's just a disaster, guys, unfortunately, going forward. Trump, hopefully he will be able to fix the real economy. I would love for many millions of jobs to be created, but with these debt problems, there's no guarantee that supply-side economics will work. It's definitely going to make the debt larger, though, but I think gold and silver in the short term, maybe they'll go sideways or a little bit of correction. I don't think we're gonna have a big spike for a while now, but this is good long term because this is going to keep the supply side of the equation for gold and silver down. Now that we've had a correction again in gold and silver for a little while, the odds of raising all the capital needed to build a lot of new primary gold and silver mines to replace all that physical gold and silver mining production that's being depleted the last few years during this bear market, the odds of being able to raise all the capital and bring a new mine online are very, very low. There was only, I think, a couple new mines that are coming online in the near future for primary gold and silver mines, and they have absolutely great project economics, or they're initially going to be run like basically treading even, hoping the price goes higher. So it's really this. I'm cautiously optimistic that Trump can fix the real economy, but the debt problem is going to grow. Going forward with supply side and Reaganomics, we're a live lab experiment, as I've stated many times, which is what the Keynesians have been trying to do. But now we're in a live science experiment where supply side economics or Reaganomics is going to be attempted in an environment where there's a lot more debt already pervasive throughout at all different levels of society than it was when Ronald Reagan implemented it. So we'll have to wait and see. It's way too early to tell. I guess it's cautiously optimistic. Hopefully Trump does not pick in his cabinet a bunch of hardcore neocons and rhino Republicans and conservatives. But, guys, you really have to live in D.C., at least for a little while, to understand the pressures here, that there's always change candidates that promise change, and when they come here, they're fought for every inch of trying to make a change. Look how Obama ran on a hope and change platform, and we found out from WikiLeaks how the Citibank, like one of his buddies at Citibank, basically picked almost the entire cabinet. So I'm sure there's enormous similar pressure on Trump. Hopefully he's trying to fight it. And, it's going to be interesting seeing if Trump's version of supply-side economics or Reaganomics does work. Long-term, I think that's good for gold. I think there's going to be more inflation. I think the debt levels are going to grow, perhaps exponentially, depending upon how the money is used, and if the real economy actually responds with real economic growth, or if it doesn't grow at all because there's already too much debt pervasive throughout all levels of society, at the consumer level, at the corporate level, at the state level and municipality level, there's enormous amounts of debt, and at the federal level. Okay, well, that's it for right now. Eric Dubin and I are probably going to record the Welcome to Dystopia episode number 29 tomorrow. And next week I'm going to take it easy. I have some family errands I have to attend to. I have to spend my time on. Okay, take care, guys. Hi, everyone. It's Jason Burack of Wall Street from Main Street. Thanks again for tuning into our podcast and for helping us get over 2 million views on our YouTube channel and over 10,000 iTunes downloads per month. We have a special offer for our Wall Street for Main Street listeners that has proven to be a good investment based on plenty of 5-star reviews from satisfied customers and independent fashion bloggers. Mo and I recently tried some shoes from a new company which is run by a family of third-generation shoemakers called Grant Stone Shoes. These are classic Goodyear welt shoes using full-grain leathers from world-renowned tanneries. In a world filled with disposable products, it can be difficult to find items which can be used for years and later passed down to the next generation. Grant Stone is a smaller brand going direct to the consumer, which offers unprecedented value. Quality and fit is the cornerstone of their program, and the customer response and reviews confirm this. These are high-quality shoes at a good price for the busy professional who wants to improve their appearance at the office, in the boardroom, or out on the town with your girlfriend or wife. Or, if you're single like me, you know you will look good with these shoes on and maybe impress the ladies with your style and taste. But if the ladies love Obama or Hillary Clinton or Bernie Sanders and hate free markets or capitalism or entrepreneurs, at least I will look and feel good in my comfy Grantstone shoes. Mo and I have worked out a special offer for our listeners. So when you go to grantstoneshoes.com, enter the code GOLD, that's G-O-L-D, for 10% off any purchase. That's grantstoneshoes.com and enter promo code GOLD.